presents more of the costs that we touch on an everyday basis. So we thought we'd bring in an expert. He's our next guest. He's going to tell us what he thinks would be a better barometer of what prices are actually doing out there. Please welcome to the show, Mr. Craig Bolanos. Craig, thanks for being on. 21% ain't cutting it. I think everybody, we had somebody write into the show yesterday saying, look, if you spent $100 on a basket of goods at Kroger 3.5 years ago, there is no way that they only cost you $121 today.
I shouldn't laugh and giggle because it's an absolutely terrible problem. But Scott, that's the problem with averages. An average does absolutely nothing to reflect someone's unique and personal experience. You named a couple. Higher interest rates. Why do we have higher interest rates? Because we had high inflation, and those interest rates are crushing people. It's not just credit cards. It's not just student loans. There was a great piece in the Journal the other day about negative equity in automobiles. That's a direct reflection of higher interest rates. And I think about this one. Ask anybody in Florida or California if they believe the CPI, and they're going to say absolutely not, because their homeowners, their flood insurance, their wind, their fire insurance is unaffordable. So it's such a personal and unique thing. The law of averages, CPI and PCE, they just don't line up with where everyone lives in some version of the real world, which last time I checked is 123 Main Street.
Exactly right. And so a little funny story is that I used to trade in London for a long time, 16 years, but I traded short sterling, which is basically their euro dollar, right? So their short-term interest rate product. So I was keenly aware of interest rates, having traded that product for so long. And they, every 3 years, whomever was the next new prime minister, they would come out and they would reconfigure the CPI basket, because everybody always wants to have it downward sloping in their direction, right? They want it to be as cheap as possible, not as expensive as possible. They want to look better. But I found it absolutely amazing that it was the early 1990s, and one thing that they had kept in that basket from World War II was net curtains over your sink in those old houses back in the day. These little curtains that every British household has that you can look out in your back garden while you're doing the dishes. And it had been in there for 50 years because it was something that helped keep the average lower. But they finally got rid of it in the early 1990s. That's when I woke up and I thought, boy, these people are playing games the whole time. So if you had to, look, mortgage interest is not in the CPI. Credit card interest is not in the CPI. Neither is car loan interest. Neither are your insurance costs. What would you put into the CPI today to be a reflection of what's actually happening in real life?
Well, I'm from Chicago, so I'd throw in a deep dish pizza, a 6-pack of ice cold beer, right. My favorite thing of crisps, which I now call crisps instead of chips because of your time spent on the other side of the pond. No, I'm teasing. But Scott, at the end of the day, we have to have some way to measure. And as long as that measure is consistent, it leads to a trend. And all of this is about trend analysis and trend following. That's just not for traders. It's not for investors. It's for policymakers as a whole. And we're going to get another dose of the Fed's preferred measure, at least their measure of the last 24 years, because we worked off CPI and went to PCE. It's coming out on Halloween. Is it going to be trick? Is it going to be treat? Heavens no, I don't know. But when I look at the price projections for year over year changes in personal consumption expenditure, what we call inflation, boy, in 2025, it's predicted to be sub 2%, 1.8. And when you look at that headline that's coming across, I say to myself, no one's going to believe it, because it doesn't line up with what's in my bank account, or more importantly, whether you shop at Publix, Kroger, Jewel-Osco, depending on what area of the country you're in.
Right.
Yeah, everyone needs a smaller shopping cart because you can't afford to fill it the way you used to.
And you brought up a great point that really people need to drive this point home. Let's just say, that's the PCE. Let's talk about the CPI for 1 second. It's 2.4%, right? And again, that's getting close to their 2% mandate, and yes, it's getting where they want it to be. It's coming down, which means your prices are going up at a slower pace. But that's on top of that 9.1% increase we had 2 years ago, right? And so prices are still rising, just not as fast. And that's why people don't feel the love, right?
You don't feel the love because, we measure things in a month over month and a year over year change. But, there's been 3 inflation spikes during my lifetime, and those are large inflation prints and they never get walked backwards.
No, they do not.
It's just a slower change thereafter. And that's the other thing. Every time someone says this time it's different, it's not.
Exactly
This is the
right.
third time in my life that there's been a big inflation spike. We just got to manage around it, both as professionals and as retail consumers. And ultimately, we vote as citizens.
Bingo, bango. I'm going to end on that one, but you're right. It just doesn't change. I mean, you just get used to it. All right. Thanks for that, Greg. Craig, great stuff. He's the CEO and co-founder of the Wealth Management Group in Chicago. Craig Bolanos, thanks for being on the show, Craig.